Welcome to Markets Now. I'm Michelle Rook along with Brad Kooima with Kooima Varilek. We're seeing a little weakness over in the livestock this morning. Grains mostly higher, except for a few wheat contracts. And Brad, let's start off over in the grain trade. First of all, soybeans had a horrible week last week. We were under key moving averages. Funds were liquidating. It looks like we've at least flushed the funds out for this point in time in terms of what they want to sell, or are they squaring up here end of month, end of quarter, and going into reports this week?
I think thanks for having me on, Michelle. I enjoy this. You know that. Thanks for calling. I would say, even reflect back a couple, 3 weeks. We have had a monster sell-off here on the soybeans.
You bet.
And, like $1, excuse me, $1.25, $1.30, $1.40 a bushel is a lot. And I think there's an element of all of that. I do think today is a bit of a test in that, one of the, very, very, basic, but one of the litmus tests that I guess I use here is if you can trade 3 days against the direction of the trend. This is our third day up now, finally, after that collapse. I'm anxious to see whether we can sustain that all day long. My suspicion is that we won't, but to me, there's an awful lot of evening up here. You got month end, you got quarter end, and you have a report at the end of the week here that has a reputation of being, potentially very, very volatile. So I looked at, as a broker, you look at, I do anyway, you look at analog years or years that have similarities to this. The one, probably the most obvious one here is that 2012 drought. We had the same drought last year, right? Coming into 13, you had the strong corn basis, you had all the rest. And then you had a crushing planting intentions report where, the government thought we were going to plant the whole world. So other people remember that too. So we'll see here. A little bit encouraged by some of that export news, but I'm not particularly optimistic on either one. I know we usually rally between here and planting. I'm a kind of a sell rallies guy. Sorry to be the no fun zone guy, but that's what my perspective is.
Yeah. What about corn? We have seen the funds go short in that market, but yet we've had all this China business coming at the market. And again, another 5.5 million bushels this morning that they bought. I know that's been holding this market together, as well as these very strong cash prices. So can we keep this going, or what are you thinking here, especially as we go into the report here on Friday?
Well, I'm going to go out a bit on a limb here, which is dangerous, of course, but
you like that.
Why not? People are, that's what you get paid for, right?
Right.
So again, as I look back at years where you had this, there's no denying that the supply ending stocks, pardon me, are tight. Around here, basis is 60 over. Okay. This is way, way past what anything, it's very abnormal. And you can't just make more old crop corn. It is what it is. Okay. But and it seems to me, as I look at what the insurance coverage looks like when you compare corn and beans and even some of these small grains, I don't know who would plant those around here. They won't. The risk here to me is that you would get big corn acre plants. You'll hold together the old crop corn because there's not enough to break it. And when the basis is this strong, how far can you really take it down? So you're going to see maybe a disparity here where old crop corn stays okay, where the new crop corn doesn't. Now, I can't predict the weather. I don't know if it's going to rain, but it does seem around here that the pattern is way, way different. We got the prospects of maybe a late spring here because of all the snow and the moisture we still have around. So I don't know. Again, I don't like to be Debbie Downer with you guys, but I'm in the new crop stuff, especially. I'm sensitive to if we get a rally between here and planting, of using that rally to do some marketing.
Yeah, we've got two separate markets we're talking about here, old crop versus new crop. And new crop, obviously, we're looking for some big acres in the report on Friday. But again, to your point, you got to get it planted. Right. So what about this? What about this cattle market? Funds have liquidated some of their length in the live cattle futures on some of the banking fears and the economic fears. Are those out of the way now? I know today we're not seeing a lot of follow through on the rally yesterday, but what's your general thought about the direction of this market now?
Well, I'm bullish. To give you, what's my general thought? I thought you made an interesting statement there about, are we done with the banking fears? I always caution clients that the cattle market like none other to me is every day when you go home, there's a chance that there's something that could happen that would make the market go down the limit. It's just the nature of the beast here. So, there's plenty of weird things to worry about. Usually it's demand fears, of course. But you just say that, and yet, I can't predict that next black swan, and no one can. So, I'm relegated to being a cattle analyst. And the way I look at that, the supply of cattle here in the north, I don't think people appreciate just how tight it is. And as you have the promise of moisture across a good share of the cattle belt, what that does potentially to heifer retention and to cow slaughter, those are some good things. So, I have to have that fundamental base of from a fundamentalist standpoint of thinking the market's got upside potential. Super encouraged with the tone of the cash market as we started this week, Michelle. Very unusual, right?
Yeah, talk a little bit about that. You said we've had some bids already on Monday. That is very unusual. Obviously, the Packers need some cattle.
Obviously, you're right. I got cattle sold to a major that are going to die this Saturday. There was bids here yesterday to customers at 167 to 168, $2 to $3 higher than it was last week on a Monday, and getting passed, by the way. The supply of good, clean, quality cattle here is very snug. So, I think that there's a 70-30 chance that you'll get 170 on the right kind of high yielding and cleaner kind of cattle if you can find them this week. So, yeah, that would be quite amazing. The South, they got more cattle than we do. Cattle might not grade as well. I think they could be $3 to $4 back, and that's fine. That is a very characteristic of a bull market too, by the way, when the North leads the way.
What about the demand picture? Boxes have had a little bit of a correction here, but we still look like we're in pretty darn good shape in terms of what we're seeing out there in the grocery store.
These demand questions are they're good questions and they're important.
But they're frustrating to you, aren't they?
Exasperating is a good word. Yeah, I mean, it usually comes from the Packer sector telling you about how they're worried about demand.
Exactly.
Yeah, right. The poor things. They're the ones that put boxes to 470 during COVID. So whatever. Cry me a river. When you got a 280 box and you can buy cattle the way they do, they're still making money. They gotta like the way things are moving now. Would they like to go back to the good old days when they're making $500, $600, $700 a head? Sure, but too bad. When the numbers get tight and we have leverage, the margins are going to change. To me, it's the feeder's turn to have some margin here, and he ought to. Didn't have any margin this winter because of the cost of gain. The measure of demand, we don't throw meat away. Okay, so how much can you sell at how high a price? The price is pretty high, and we're selling a lot of it, and we're not to our tight numbers yet. Look at beef production last year is big. The tight numbers are ahead of us. If we start to hold these heifers and all the rest. So, I don't know. Anybody that says demand's bad, I don't think they're reading a different playbook than I am. I think demand is not just good; it is great.
Hog market after the collapse had a couple of up days here, but the funds are still short, and we're going into a hogs and pigs report. So today we're down. Do you think the funds are going to sell on strength and keep pushing this market short, or what?
If ever there was a market to have my disclaimer in front of me, it's the
yeah, exactly.
They are hard to trade. Anybody thinks they're easy, boy, send me their book. To me, the market got away from itself, and sometimes markets do that. Markets trade based on who's wrong, not who's right. And I thought that's what we had done. I thought maybe we had purged enough of that on that break that we could stabilize here. But now you've got the fund short, which is puzzling to me why, but you got to remember a fund doesn't know the difference between a gilt and a barrel. Okay.
True.
I mean, he just trading the lines on a chart. I would have liked it if we'd had better volume and an increase in open interest yesterday on the rally. We didn't. I'm worried that there's a little more problems to come. We're going to get a hog report that's going to remind us that, hey, we got a little over 100% of last year's hogs, which is a fairly big number. We're not going to run out. I hope that the seasonality of the market as we go to May gives us a bounce, but I wished I had an encouraging word to give you, but I'm afraid we got to buy it a little time before this hog thing gets better the way it feels to me.
Well, we're going into end a month and end a quarter. Maybe we'll get a little bounce on that. I don't know. Maybe some
there could be some short covering from the funds. That's a good point. Sounds good to me.
All right. Well, we'll see if we get it. Thanks so much for joining us, Brad Kooima with Kooima Varilek, and that's Markets Now.